Hi, friends. Wish you a very good afternoon. Well, in today's video, I wanted to briefly update you about what are the key challenges or what exactly is happening in the Indian and global markets in current times. So, what exactly would be the format of this video would be we'll be talking briefly about the Indian market, we'll be talking about the global markets, and we'll be talking about what an investor needs to do in current times. Please note that this free educational video is purely for the purpose of learning and should in no manner be considered as any advice or any offer to sell anything. Now, I've written down a couple of pointers as I speak. So, firstly, I've been talking and hearing out a lot of these conversations about the Indian market. So, the recent RBI move of keeping everything same has kind of again put a question mark on the fact that how soon will the rate hikes happen for the interest rate hikes. That means the repo rate and the reverse repo. Well, if you look at the inflation in India, it's close to 5.5, 6, which is again within the comfort range of RBI of 4 to 6%. And RBI is trying to watch the international development of what is happening in the US markets and other developed economies. Now, surprisingly, the bond yields post the RBI announcement of doing nothing came down, as I shared in my earlier videos. Now, again, crude is increasing. The other uncertainties in Ukraine is there. I think it's getting solved. And US Fed, how soon it would taper and do the rate hikes is also going to play on the Indian bond market. Now, this typically would kind of pose question for Indian investors or investors who want to invest into India, how to approach the market. But before I do that, let's also quickly understand what the mother market of all, that is the US market, and developed markets are behaving. So, the main worry in the US market right now is the word inflation. Now, everybody is wondering what exactly has caused this inflation. In simple layman terms, it is excess money chasing too few goods. So, in the 2 years of this virus and epidemic, what has happened is um, too much currency has been floated by central bankers to kind of give comfort to the economies, to kind of bail out these economies from a recession. But in the process, when too much money is put in the system, the prices of goods and services starts rising because output is not increasing at that much. So in US alone, the trade deficit is 1 trillion US dollar per month, the last figures which I was reading. And according to various experts, the situation right now is 7.5% inflation and likely to get worse. Now, few people are saying to beat this inflation by buying value stocks compared to growth or momentum stocks. Now, my personal belief is that even that would have a limitation when everybody would be chasing uh, momentum. Sorry, I beg your pardon. These value stocks, ultimately, their prices would also go up. Though still there is a long way for this to happen. But eventually, everything would reach a peak, even in equity. And equity, be it in Indian market or global markets, will be very volatile, at least seeing how the things are. So, a lot of people are commenting it would be very difficult to predict a 1 year view in equity. And that is the case. Very difficult to predict how things would be. Now, a lot of the economies, what they're doing is to not show the correct picture, specifically the US economy, they're trying to pose their CPI or WPI data in such a manner that it doesn't capture the true inflation. Now, 7.5% is the inflation as per their data, but actual real inflation is as high as 15% if you see other parameters and benchmarks. So, in real sense, their so-called unemployment data and all everything is kind of managed in such a manner, according to certain videos which I've seen and heard, that the true picture still remains the economy is weak internally and too much dollars is there in supply, and overall, the inflation figures are far worse than what is being projected in the economy. So, also the other angle to look at this is the bond yield. The 10-year GSEC, sorry, US Treasury yield is currently close to 2%. So, what people are doing is they're rushing to safer havens. They're even buying bonds. But actually, bonds will also not help in such a situation of inflation, because rising interest rates would mean the value of the bond coming down. So gold is being chased, though of course the rally has not been very much in gold at the moment, it's gradually going up. So what I've just given you is a brief perspective of overall how things are looking at the US and other developed countries, and a picture of what US is doing currently. In fact, quickly, what Fed needs to do is to reduce the overall inflation by encouraging people to save more, so that the money supply or excess supply is pulled out by giving better rate of interest. Now that also is a challenge. As I explained earlier, you cannot have a very high interest rate in US because they have a huge national debt. So it's a catch 22 position for them. Now, keeping all of this in mind, what do we do as investors? So, if I'm an Indian investor or somebody who wants to invest into Indian or other markets, the better bet would be to look at things like debt, and debt to the short term of the debt, because obviously our interest rates might also go up in the Indian context. So, short dated debt products like short term fund, ultra short term funds in the mutual fund space could be considered. And also, short dated maturity bonds could be considered. Apart from this, in the equity, obviously, an asset allocation in terms of a hybrid would be preferred. A balanced fund would be a better idea. SIPs continue to remain a good option, so no question of timing the market. And a view of equity should be more than 5 years if you're investing. Because 1, 2 years would be very challenging for investors. And stop timing, stop sitting on the sideline. And if you're entering into equity, be prepared. There would be few hiccups on the way. It could be a bumpy ride, but then eventually equity outperforms other asset classes as we've seen historically. So that is all I wanted to convey in this video. Hope you liked it. Stay safe, and thanks once again. This is Arunal.